Is this the end for Bitcoin and altcoins, at least for this bull run? Should we just go ahead, pack our bags now and sit back and wait for the confirmation of the next cycle sometime in 2030? Well, in this video, I'm going to break through the noise, and we have a lot of noise to come because on Monday, at least in the words of Jim Cramer, take that, of course, with a grain of salt, he's expecting a 1987-esque Black Monday. So he's expecting a pretty large drop. Now, many people may see this as a sign to go long in the market, but let's not kid ourselves. The market's already in a very tough spot, and this is on the back of course, even more tariff uncertainty. $11 trillion have been evaporated since February of this year, with recession odds above 60%. So with this noise coming through, my job here in this video today is to give you the tools like this incredible tool I'm going to be making available here very, very shortly for you guys, grouping together 12 of the best ways to look into the cycle, into the Bitcoin cycle, to do your own research, to discern yourself where we are, so you don't have to rely on people like me, YouTubers, for your own confidence in the market. But also tools like this, looking into Bitcoin's liquidity cycle, looking into the relationship between Bitcoin's price and the realized price, and even whether or not we have to be worried about key levels of support like this ascending channel. This is all going to be mentioned in this video. Again, it's to cut through the noise, especially on Monday. So these are some very important things to keep your eye on, guys. Just make sure, of course, if you want to keep up to speed with this information as it comes in real time, hit that subscribe button with that bell turned on. Now, I've said this for a few weeks and maybe even a couple months now. I'm still expecting short-term pain to come in. Short-term pain, long-term gain. Long-term being anywhere from 6 months to 18 months. Now, there's no point in me going over all of the macro uncertainty because I've already spoken about it over the last few videos, and I think most of us can all agree that many people right now are macro experts. Everyone's talking about tariffs. Guys like Mike saying tariffs are a good thing. Guys like Rob saying it's a bad thing. We've got reports that some of these leaders around the world are folding under the weight of the tariffs. And we've got Ash Crypto here saying some, theories about what Trump and his administration might have for crashing the markets intentionally, pushing people into bonds, lowering interest rates that way, in a whole host of other reasons. I've even come out with my own theories, of course, as well. But let's save the macro armchair expert theories for a different video. Of course, this one is looking into charts and into metrics, important metrics. And I have to stress, guys, a lot of people look through the cycle in terms of just simply one dimension, through price and price action alone. I like to look at it through many different lenses. So this chart here has 12 different lenses, right from the lens of holders, so short-term holders, long-term holders, realized price, MVRV, right through to the relationship with stablecoins. And I'll talk more about that in this video here. This is actually essentially the Bitcoin liquidity cycle. We have moving averages, top indicators, and also miner revenue, value transfers. There's a whole lot. And this is all just to give you and me a better idea of where we are in the cycle. There's no point looking at 10 of the same indicators. Now, there is a small silver lining to all this because Bitcoin's been performing quite well, actually, in this stock market madness, right? It's obviously, price is quite tethered towards the stock market and always has been. But now it's kind of broken away from that, right? It's decoupled. And a few days ago, it was actually up on the day when the Magnificent Seven and others were down. So I want to quickly talk about the 4-year cycle because I think a lot of people have this concept wrong. A lot of people are discrediting it. I'm sure people will just skip ahead of this part of the video just because they're like, oh, the 4-year cycle, that's over with, Kyron. But I disagree. And I'm going to explain very briefly why. First of all, the 4-year cycle itself isn't actually technically off just yet. We're still in a bull run. You can call a bear market as early as when price falls down 20% in a bunch of macro uncertainty, but I think it's far too early to call for an absolute bear market right now. Yes, you may be lucky if you're one of the first people to call a bear market, like way over here, and there were people that were doing that. And yes, they're going to look like absolute geniuses. I'll look dumb for saying what I'm about to say here, but you can't call for an absolute bear market until you have the complete breakdown of many of these bullish indicators. One being that the 50, 100, and 200 EMAs are still above the 1-year SMA. Now, when it breaks down, when they break beneath the 1-year in red here SMA, that is the complete confirmation of the bear market. Until that happens, it's all guns blazing. Now, if you're someone who likes trying to time the tops of things, okay, then this isn't ideal for you because you're going to be missing out by 10, 20, 40%, maybe even sometimes. This more for me is confirmation of where we are and if we truly are in a bear market. Now, what people get wrong, I do believe, looking into the 4-year cycle, is they compare it with the 2021 cycle, but they always seem to miss out the fact that we had an early pump from, again, the pandemic. We came down much sooner than expected from the banking collapses in the United States and also all of our collapses in the crypto industry along with it. Massive, massive issues at that time. We went up too quick and down too quick. Okay, we didn't follow through with the normal cycle. And yet, if we look at the 4-year cycle through, I believe, a reliable lens, which is the miner revenue, these are the guys that literally run the network, guys. They run the network that we all know and love, Bitcoin. Then looking at that, okay, through moving averages, it's the same cycle that plays out. It's just that it's lengthening a little bit over the course of time. We have the breakdown here of the bullish momentum into bearish momentum when the 200-day moving average goes beneath the 1-year moving average. Bearish momentum, flick over here a bullish cross. So we have bullish momentum, we have two highs. Okay, we have the bearish cross, we have the halving. This is the halving cutoff here. We then have the bullish cross again, and we have the massive euphoria bull run. We have the death cross again, 200 back beneath the 1-year moving average. We have consolidation. We have yet again the bullish cross in the yellow zone. We have one top. This should have been the second top. Again, it was forming. The pandemic pulled us down. We still had the halving here though. We still had the cross and we still had the bullish cross. We still had the bullish cross right in time for this. Again, bearish cross happened here. Okay. And then we had the consolidation. We've then had the bullish cross again in yellow. We had one top, two top, corresponding with one top and corresponding with two tops. We then had the halving. We had that consolidation around bearish momentum. Once out of the bearish momentum, we've now flicked into bullish momentum. It's just that the bullish momentum actually has come a little later than normal. If we look solely into the 2021 cycle, it's hard for us to look at where we are right now and think we're on track. But again, that cycle was different. So we go back to the only other cycle we can reliably somewhat look at, which is this cycle. Yes, that's right. We've only ever had 2 cycles really in crypto. This wasn't really a cycle. So yeah, that's kind of not a lot of data, right? So we come back here to 2017, and there are a lot of similarities looking at through price even, and also through miner revenue than back in 2021. But the problem is that cycle was different because it was 2016, it was 2017, it was 2018. It was a long time ago. Okay, so we can't reliably look at that, within price action and go, this is how it's playing out, because I solemnly do think we would have had a much better idea if this cycle played out normally, as it should have, something like this, right? But all we do know is through miner revenue, through things like the moving averages here, the bull run, kind of this stage here, is that we are on track, okay? And we're only what is the date today? The 6th of April? We're 4 months, not even 4 months in to this cycle. That's like calling it quits here in 2017 on this dip, this 30% dip right here, okay? Thinking, it's over because it's not exactly like the previous cycle that came before it. You see what I'm saying here? It's all about perception, different lenses. But I'm not here to defend the 4-year cycle by any means. I think what's more important for us to look at in this video and continue on here is what may happen as the breakdown of not just the 4-year cycle, because I do think that I am still a believer of the bull run will still continue, but breakdown that will cancel the bull run entirely. Okay, so 4-year cycle or not, I think the bull run here is the important aspect. And you can see we're actually respecting this bottom trend line in this ascending channel here. This very much so reminds me of the 2016 or 2015 to 2017 channel as well. Again, these are some more similarities we can pick and prod at here. But again, it's just happening on a much longer time frame. History has a tendency of rhyming, never exactly repeating. So this is one channel, a bit of TA I'm looking at personally for confirmation of how we go in this, next coming days here or the next few weeks. If we break beneath this, that is one red flag up, not all of them, just one. A major red flag for me, and this will come likely after probably a confirmation of the moving averages, which I'll talk about here in just a moment, that we are in a bear market, is if we go beneath this orange line. This orange line is what's called the realized price. It's just essentially everyone, right from Satoshi Nakamoto right through to Steve, who just bought Bitcoin an hour ago, their average buy-in price. My average buy-in price, your average buy-in price across every single crypto holder. And why is this important? It's important because when we break beneath this, that means that the average person in buying Bitcoin, right from Satoshi right through to Steve, is at a loss, which is obviously confirmation we're in a bear market. Now, again, there are signals before this we'll have confirmation of, but this is a very important level to keep an eye on. Now, there are very important charts to have a look at for the health of the Bitcoin and crypto cycle whilst in a bull run. And this, without a doubt, is one of the most important. I'm calling this essentially the Bitcoin liquidity cycle because this is SSRO. I also do have this on this chart here, okay, stablecoin versus Bitcoin, because what this chart does is it takes the stablecoin market cap, okay, versus the Bitcoin market cap, and it says, well, if the Bitcoin market cap in relation to the stablecoin market cap is a lot higher, then this will go into the red. Why? Why will this go into the red? Well, because it takes a lot more money for stablecoins to push up the price of Bitcoin and to keep it high. Essentially, the purchasing power of stablecoins have diminished because Bitcoin's price is higher from the market cap increasing, of course, and stablecoin market cap is a lot lower, meaning that, of course, if you were to throw all the money of stablecoins into Bitcoin, it's not going to push it much higher, right? Whereas conversely, if you have this indicator go down beneath this zero midpoint right here into the green, this means that the stablecoin market cap in relation to Bitcoin is much higher or is very high, which means that you essentially have more purchasing power. So it's a very important metric. It's like kind of like global M2, but for Bitcoin, you can see here cycles have played out throughout history. Okay, this is like 1 year cycle patterns. You can see we reset. This is healthy, right? It's while Bitcoin's price goes down in these times and stablecoins dominance goes up and therefore the market cap goes up, it's a healthy reset because we gain more market cap here in stablecoins for the next push, of course, to push up into Bitcoin's price here. We have essentially more money on the sidelines ready to throw in. Okay, that's kind of roughly speaking how it looks. Again, we have a healthy reset. We come up, we push, we reset. We go up, reset, go up, reset, go up, reset. And this has actually happened right through the two previous cycles. You can see constantly we go into the green zone, okay? Frequently, we reset, we have a healthy recharge. It's only up here, we occasionally go into the deep red, okay, but mostly we just break above the midpoint. Now, in this cycle, notice something very different. Ever since, 2022, we have only fallen beneath the midpoint 3 times, 1, 2, and 3. Okay, so notice all of these 3 midpoints correspond with a huge jump up or a soon-to-be jump up in Bitcoin's price, or at least these 2 do. We're in down here right now. But you can see for most of the cycle, we never did. On these pullbacks, we usually see go into the green zone. We've been above the midpoint still. So it's kind of like the way I would think about it if I'm you listening to this is kind of like, imagine Bitcoin or the market hyperventilating, being so excited based on all of the bullish announcements. We've had all of the massive adoption. You guys know it's the adoption cycle, all the massive, amazing news. The market's hyperventilating because it's like, well, we're so excited. We got to keep pushing money straight into Bitcoin, buy. And the stablecoin market cap or the relative growth of stablecoins never really had time to reset for that massive charge. And obviously when it did these 2 times, it rocketed. Even over here, it barely broke beneath, but it rocketed. So we need to see, you can see clear distinctions between these 2 cycles and this cycle, clear distinctions because of the adoption, I do believe, right? But now we are pretty far down and I want us to keep going, which means, yes, Bitcoin will bleed more. Yes, people will probably go back into stablecoins, but it will mean, so long as this drop isn't catastrophic, that on our next bounce, we'll likely see some huge money flow into Bitcoin. And I suspect, of course, the growth in the stablecoin department based on the adoption in the US, the Genius Act, the Stable Act, and Fit 21, as well as just the general nature of adoption with tokenization of real-world assets, we're likely going to see a lot more money flow into altcoins. Okay, a lot more money. So I come to this chart here, and again, I'm not going to explain how this works because there's 12 different indicators. You've got holder-based indicators, right? Looking at, again, short-term holders, unrealized profit loss, long-term holders, realized price cycle top, bull run ribbon, delta top, SOPR, SSR, pure multiple, CMF, money flow. Different dimensions to look and analyze the cycle through, as well as this nice colored MVRV chart behind it as well. But I did want to point one important thing out again, guys. Going back to this cycle canceling, if you want to know one thing I'm personally eyeing off for the next week, especially around Monday, is if price respects the 1-year moving average. You can see it obviously does and always will. But when price goes beneath it, you can see back here in this sort of double top in this correction, it did fall beneath it, it did close beneath it and reopen on the daily. On the weekly and monthly, it wicked. Now, it's important because when it does close and fails to go above, that is a very early sign of a bear market or a looming bear market. You would have had a great indication here at around $47,000, $48,000 in the previous cycle, okay, that it was coming based on price action, respecting that line and failing to break back above it, even before the death cross came. But you can see as soon as it breaks beneath it and struggles to kind of maintain that, it's a warning sign. Now, as many of you should know by now, assessing the short-term holder, realized profit and realized loss is also very important, specifically in a bull run, because a lot of the market makers, large traders, and sort of like these VC firms, they like to, when they do short-term trade, they do like to keep price relatively around their cost basis or their average buy-in price, right? And so assessing short-term holder realized price and their net unrealized profit loss is important. And you can see right now, based on these indicators, they're actually down right now. So if I untoggle the cycle clock, again, they're down about 11%, right? Which means that, and I haven't quite figured this out, whether the chicken or the egg comes first, but we like to keep price oscillating around the blue line. Because you can imagine, all right, being a trader or someone who's doing swing trades, if you're in Bitcoin up here, all right, and you're holding on, you're going to want to obviously push the market back up again to, break even again. And this is on a, 155-day, average. So it's over quite a long time. And of course, this encompasses a whole range of people. But you will notice throughout a bull run here, price does not like being beneath this short-term holder average buy price for very long. Okay, so excluding the bear market here, happened once. It happened for around, 60 days. Happened a second time here for around 110 days. And right now we are approximately 40 days in to that particular situation. So we'll see how it goes. There are a few indicators, again, I'm eyeing off. Many of them are on this chart here. So if you guys want to get your hands on this indicator, it's coming out here in the next few days for level 3 members in the private community. Of course, first link down below if you want to join up. But needless to say, of course, I'll be talking quite a lot about it on the channel as well. So you will see this a fair few times. It just tells the complete picture. Until tomorrow, I'll talk to you soon. Take care. Bye-bye.